What's going on, guys? Brian's here. Today is Tuesday, March 28th, 2023, and the market is open. It's now about 11:46 a.m. Eastern time here in New York, and I want to call attention to a swing trade that I opened last week on the NASDAQ. Now, originally, I was just going to record this video for a member of Quant Trading app right here because I believe he took the trade with me, and it's on this broken wing butterfly that I shared last week, and then we've been swinging it. I believe the position was opened, I don't even remember. I think last week, Thursday or so the 22nd. Let's just scroll here. Swinging this. So this was, the 22nd. So it was shortly after the FOMC. So right here was the 22nd. So this was the day of the FOMC announcement last week, Wednesday. Open up a broken wing butterfly. So for those of you that don't trade spreads, just know that I was pretty much thinking that the NASDAQ, the QQQ, would have pulled back. And as we can see, it did. But yesterday morning, which is Monday morning, I made an adjustment to the trade. I actually just reduced some of my size, and I want to kind of address why I did that, because at times we freak out in certain positions. Now, when I initially opened up the trade, I believe I shared what the idea would have been. I think it was my stop loss was if the NASDAQ was to close above today's high. So initially what I was saying is if the NASDAQ was pretty much going to close over 315, I would close the trade. It was opened up, I believe, right here just before this drop. It ended up hitting up over 35% within the same day, but I didn't take any profit as I intended to swing it. The next day, obviously, it pulled back, retraced, but it entered in this area here that I expected to be some sort of supply. So the day right after, if I'm swinging a trade for the following week's Friday, I don't want to be, too micro focused on what's happening the exact day after. I already know where the stop would be. I have my alert set, and then I'll come in and check to see if we break above this level, because that would invalidate my thesis or my trade idea. And we can see most of the time trades just need a little bit of time to play out, especially if you're swing trading. So the first thing this day was ignored, and then the trade was kind of working itself out a little bit here. Wasn't really up that much compared to how much it was up the same day, which is again plus 35% return within the same day is great. I didn't go with large size. I only went with 5 contracts, and this spread cost $100 per unit. So I had 5 of them. So it was a $500 position. I was risking essentially. I was willing to give it about 50% stop loss. I believe that's how much the position would have been up at this area. So that's about $250 in risk, which for me is not, it's not really a lot. I don't trade the Qs that often. I trade the SPX, and I'm used to having much more capital out whenever I'm swinging. So in this case here, I wasn't too concerned about the trade, relatively speaking, but for another trader, I understand $250 might be a lot for your account size, or you're uncomfortable with swing trading. Now, Monday, the reason I made this adjustment here is because what I have on this chart is this is the volume profile, and this is the week to date aggregated volume profile. So usually if you're using the QTA script, in which I've shared publicly, I believe the link will be in the description for this video. If we just jump over to the day, you guys know that you can have it look like this, and this is the point of control for each day. I've done many videos on points of controls on this channel. You can check out the playlist for that, but I usually, as of lately, I keep it just on the weekly because I'm mostly swing trading, and I'm mostly looking for bigger, higher, inflection points as I'm evolving as a trader, trying to push myself. So I'm just interested in the really large trades. I don't pay too much attention to the in-between. I know this is a mega level here, and that's kind of where we are right now. The levels that you see on the chart are the QTA algo levels. So we have the intraday levels here, and this is the weekly levels. This is explained in other videos and so forth, but this purple level right here is the absolute gamma strike for the Friday expiration. So just a little quick breakdown to what levels you're seeing on the chart. These are all plotted on the chart from these studies, so nothing here is manually drawn in. And yesterday, the reason why I wanted to make an adjustment, or why I was just a little bit concerned, is because price did gap up, and then we opened over the last week's week-to-date point of control. So that made me a little bit concerned, because the thought process was like, okay, if it was able to battle and get all the way back up over all these high volume nodes, then I might be at a little bit of risk. So just following, I'm just conditioned to follow my risk parameters. I just reduced the size. So if I was in 5 lots, I cut it down to 3. And now I'm just in the 3. I took profit today on 1 of them, so I'm just in 2. So it's not a large size, but I'm just following my rules. It doesn't really matter if I'm using a $100 position, a $5,000 position, even all the way up to a $15,000, $20,000 position. I follow the same rules, so the same risk parameters. If we broke up, I didn't expect the price to get over this week to date volume profile, so I'm just going to follow rules. I have reasons to either come in, hedge, adjust, do something to protect the trade, because it's at jeopardy of being in danger. However, this was last week's volume profile, the value area high. So this is referred to as the VAH. Again, these are just basic volume profile terminology. We have the POC and we have the value area high. Even with that, even if that's not something the thing I want to take away is here, this break over this level made me a little concerned. Reduce size. Reducing size means I'm reducing risk. However, once the NASDAQ broke back below this level here, so this is just around, we'll say 410 and 75 cents or so. Once it broke below this level, then it means it wasn't as risky anymore to continue holding, because now it's back below the level in which it's, and we can say quote unquote it's supposed to be, and then it ended up selling off. So it was nothing. Now the trade is working out in its favor, in our favor, and as price ended up bouncing back up here, we can see it got rejected at VWAP here yesterday, but even so, it would take more energy for it to then get past the point of control again. And this is the weekly midpoint level here. So it would take more for it to actually go back again and break this level again. So in a sense, below this level now, it's not really a risky trade to have anymore because it's working. So you don't want to micromanage or overanalyze and do a million different things. The strategy or the play, we open here, we're expecting the Qs to pull back. We have our stop loss. There's nothing to do the next day. Did it trigger? Did it hit our stop loss? No. Did it close above here? No. That's why I don't like to make swing trading decisions usually the first 30 minutes or the first hour or so of the day. This is a 30-minute time frame which we're looking at. So this was about an hour and a half into the day. Yeah, you look at it, you're like, okay, the P&L is probably down, I think 20% or so at that point. So you're talking about, for me, even if you're using $1,000, that's a $200 red position here. It's not the end of the world considering what you're looking to gain. Now, if it closed up here, it would have been realizing maybe a 25% loss or so, all the way up to a 50% loss. It would have taken the NASDAQ to probably come all the way up here and then maybe, close around this level. But at this point, then it means we were wrong on the direction. And I'm never upset if I take a trade and then I'm wrong on the direction, because that's it just means I was wrong. But if you take a trade, let's just say you just bought a put option, and then the next day the Qs go up this way, and then you realize a loss here. That being long that put option might have cost you maybe $5 or so, depending on the expiration. And then the next day you might be down 30% just because the Qs went from here to here. Implied volatility dropped as the Qs went up, and then it also went against you. So now you're talking about a $5 position, maybe only worth $3 or possibly even less, depending again on your expiration. That's very difficult to hold. And in this case, you're realizing a loss, and then you see later in the day the Qs come, it ends up selling off, and then you're pissed off because then you're like, you bought the put here and you're thinking it was going to continue selling off down to 405, possibly even the 300 level. You took a loss, and then the next day you see that you were right. So what do? You enter in the puts again, and then the next day it's choppy, so theta is destroying your puts, and then it just goes up, and then you end up taking the loss here. You see how that can be pretty chaotic, and it creates bad habits for traders that are new to the market, because it becomes very difficult for you to hold your positions as you haven't had enough experience just holding through some volatility. But part of that is you account for that when you first open the position. So you use the appropriate position size, you use your risk profile. So risk profile is something like option strat here. You mock it up to see what would be the theoretical, loss if the position went against you. So in this case here, if we're looking at a percent on this, I know now if it went up to 315 this week, this would be way too much of a loss for me. I don't like holding options positions down past that much, especially for this type of trade. So my stop loss now is lowered down to 310 because I'm aware of this level here is where the position will probably be a break even. So I don't want to hold this position now that it's working out in my favor and give back the entire 50% of the profit. So now I'm adjusting. So if the stop loss is here, the stop loss has now been lowered to this 310 levels. So 310 is also the absolute gamma level. So this is a key strike here from the options chain. If we were to actually jump and take a look at the daily chart, which is something that's also important to take a look at. If we zoom out here, we just come back and just try to find a key resistance on the chart right here. Let's make this solid. And this is just loosely drawn out on the chart as an example. We can see this level was as of significance. Zoom out. This here was 2022. It ended up hitting this level, bounced a little bit, and then it sold off, ended up acting as resistance. Just traditional technical analysis, the break and retest, sold off again. And then we can see how this area is a key inflection point on the charts for the Qs. So now if I'm aware of that, if we jump into the intraday levels here, we can see that this is partially what acted as resistance. And knowing that, I'm not going to keep my stop loss above this level at this point, because if the Qs was to get back over this level, I'll be down much larger than I would like to be. B, it increases the likelihood that it might continue to go higher. So now the next sensible thing to do is to lower my stop loss to at least a break even, so I don't give back too much profits. I've already locked in some gains earlier here today at 50% profit. We can see that the trade is currently up 55%, but now we can see if I continue to hold this trade here, let's just say by Thursday, if the Qs are still around this area, there's still opportunity to make another 100% or so on top of the 50% that's already made. And obviously a spread like this, the closer and closer to expiration, the more accurate you are, the opportunity to make a lot of money is there. At most on Friday, I'll only be in one, and I will hold that, considering it to, I will call it pretty much my lotto, because at this point, the risk will be very small. It would just be $100 in risk, and I would have already realized more than enough of that at that point, again assuming everything goes well. Or I might just end up closing out the entire trade here around maybe 308 or so if some strength comes back into the NASDAQ, locking in a 70% return, as we can see that it's holding the intraday levels on the QTA, which is quant trading app, by the way. It's holding these levels here, so this is just statistically where it's calculating it would have acted as some sort of support for the intraday price action. But I'm aware that this is a little bit of a demand down here, so I'm thinking it might still make it down to this level, and there's a ton of gamma down at the 300 level. So I'm just conscious of these key levels, and the purpose or the intent behind making this video is just to kind of walk you guys behind the thought process of risk management, as well as not acting preemptively, not trying to predict what's going to happen. We already made the assumption back here that this was based on the FOMC, the price action that was happening here. We can see some of the selling pressure that was coming in. So it was based, this was the original thesis. Now, trade management is a second phase of trading. Sometimes it's easy to just enter the trade. The next part is how do you manage the trade? What do you do when you're in the trade? And then lastly, obviously your exit. So there's the entry, the management, and the exit. I was just looking to share my thought process between the decision making which I make. Again, above this point of control, that surprised me, so I felt comfortable taking some risk off. Once we get back below this level, now I can be risk on again. I can add back to the position. Now I feel comfortable because this is the level that I'm using as my resistance here. Hopefully this quick video helped some of you guys, and let me know if you'd like to see more intraday content whenever I get the chance. Obviously, if I'm trading, it's very difficult. The market has been cooperating pretty well as of late, so not much crazy price action intraday, relatively speaking, compared to 2022. So it'll be a little bit easier for me to just hop on and record little quick things like this. Leave a comment down below, like the video, share it if you learned something, and I'll catch you guys on the next one.